Okay, guys, welcome, guys. In this video, solely we're going to focus on different trends, right? So, like I said on the Forex Wiki article, so we have like three types of trends. Okay, so whatever market you're going to trade, that's either commodities, stocks, forex, indices, you name them. Okay, the market can only move in basically one of those three trends. Okay, and those trends are as follows. So the trends are, we have an upward trend, a downward trend, downtrend, and a range bound market. Okay, ranging market, you can call it a flat market or sideways market. Okay, but all it is though, it's basically when the market is not going up nor down. It's basically just moving sideways. Okay, so what is basically a definition of a downtrend? So in a downtrend, we're saying that the market is going to make a series of lower highs and lower lows. Okay, that's basically how the market tends to move. So we're saying that although it's a downtrend, the market won't move in just one straight line, right? It will move in a zigzag formation. It's a zigzag formation. You can call it a wave form. Okay, yeah. So the market is going to constantly make lower highs and lower lows. Okay, so what is a high? First and foremost, this would be a high. Just to briefly explain what a high is. Okay, so a high would be the highest traded price before the price is dropped. Okay, so meaning in this scenario here, precisely this one here. Okay, so the prices had gone up to that high. Okay, so this is the highest we've ever gone before we started dropping downwards. Okay, which is why we call that a high. Okay, same thing with this here. Okay, so this is a high simply because it's the highest traded price before the prices started dropping, right? So this is called a high for that reason, and that is a high too. Okay, so we're saying the market is going to make lower highs. You can see how each and every high here is basically lower than the previous one. Okay, because this one here is lower than the previous one, which is lower than the previous one. Okay, so in a downtrend, we're expecting the market to make a series of lower highs and lower lows. Okay, so lows would be the exact opposite of what a high would be. Okay, so a low would be the lowest traded price before the prices went up. Okay, so this is the lowest we've ever been before we then reversed and started going upwards. Okay, same thing here. This would be called a low because it's the lowest traded price before we went up. Same thing here. Okay, so in a downtrend scenario, we're saying that the market is going to make a series of lower lows. You see, this is a low, and this one here, and this would be a low too. Okay, so you see how the market kept on making lower lows. Okay, so it shows you that the current momentum is to the downside. Sellers keep on establishing new lows. Okay, taking out the previous lows, that is. Okay, and then you also have highs here. Okay, so it shows you in this market that the current strong party would be the sellers, for the reason that although buyers are trying to push the prices upwards, but then it's not sufficient such that we create a high that is of the same magnitude as the previous high. Okay, so they tried to push the prices upwards, but then it was basically the most they could make was a lower high than the previous one. Okay, which then it's indicative of what is it, that the sellers are, I mean the buyers, sorry, the buyers are running out of steam. Or yeah, okay, they're running out of momentum. So in such a trend, you then look for selling opportunities. Okay, so in a downtrend, you're selling, right? And then we have an upward trend. Okay, so the upward trend is the exact opposite of what a downward trend is. You see how in an upward trend, in a downtrend, the market is making lower highs and lower lows. Okay, so the upward trend would be the exact opposite of that. Okay, let's see if I can find an example here. Let's look at this one here. Okay, upward trend. Yeah, okay. It's not the best of examples, but yeah, in an upward trend, we're expecting the market to make nothing else but highs, higher highs and higher lows. Okay, higher highs and higher lows. Let's take this one for example here. Okay, so in a downtrend scenario, as you guys may know by now, the market is going to make lower highs and lower lows, right? And then the opposite is true in an upward trend. Okay, we're going to make higher highs and higher lows, right? So this would be a high, and that would be a high too, right? So like I said, guys, a high would be the highest traded price before the prices dropped, right? So if the prices had went up here and then it started dropping, then where's the high? Where's the highest traded price before it dropped, before this downward move began? It would be here. So which is why we call this a high, okay? So that is a high, and then this would be a high too, okay? So in an upward trend scenario, we're saying the market is going to make a series of higher highs, okay? You see how this high here is higher than the previous high, which is that one, okay? Has the definition higher highs, okay? Same thing with the lows, okay? So this would be the lowest low, and then this would be the following low, and then another following low. You can see how the market kept on making higher lows in succession, right? Consecutively, kept on making higher highs and higher lows, okay? So this then thus shows to the trader, the most informed trader that is, that the current momentum is to the upward side. So you best look for buying opportunities for that reason, okay? So there's never going to be a point in time where someone would be selling in an upward trend, okay? It takes a bit of practice. I'm not saying you cannot do it profitably, but it takes a bit of practice, okay? For now, let's stick to the rules. So it's always advisable to determine what trend is prevailing, okay? So if it's an upward trend, then you buy. That's basically how you establish your bias as a trader, okay? So how do you really determine you want to be a buyer in a certain market or you want to be a seller in a certain market? That's always based on what the market is basically representing to you. What is the market giving to you, okay? The information that the market is giving to you, okay? So here you can see we've been making higher highs and higher lows. So to me, it's obvious that the buyers are predominant, okay, pushing the prices upwards. We kept on making or establishing new highs there, right? We kept on establishing new highs, okay? And then a ranging market. So in a ranging market, some people may call it the consolidation, whatever you want to call it, okay? In a ranging market is basically, you see how in a downtrend or in an upward trend, the market is supposed to make higher highs or lower highs or something of that sort, right? So in a downtrend, the market is basically, in a ranging market, my bad. So in a ranging market, the market is making highs and lows at more or less the same price levels, okay? Maybe this would is not the best of examples, okay? But we're simply making highs and lows at more or less the same price level. So it gives you the impression that the prices are now moving sideways instead of upwards, no, downwards. So prices seem to be moving sideways, okay? Hence, it is called a flat market or say a sideways market, okay? Simply because it is not going up nor down. It's basically just going sideways, okay? So that is it in terms of different trends. So in a ranging market, you can either buy, you can sell. It now boils down to what is called support and resistance, okay? Which is covered on there's a specific article dedicated to support and resistance, okay? Please be on the lookout for that. Thank you guys for tuning in and cheers.